Let me start with our investment strategy. We reduce private market risk by investing only in mature buyouts. We only invest in profitable cash-generative companies. We invest primarily in developed markets, North America and Europe, where the depth and the quality of private equity managers is the strongest. We create alpha by focusing on mid-market deals. The typical company size we look for has an enterprise value of 250 million to 2 billion, small by public market standards, but we think a sweet spot of good companies which we can be transferred into market-leading great companies. And we create alpha by partnering with top-tier private equity managers with strong track records through cycles. Together, this results in a diversified portfolio of resilient companies with a more consistent return profile where performance is less cyclical or seasonal. We believe this portfolio construction allows us to achieve private equity returns and reduce risks affiliated with private market investing. This portfolio construction has been the foundation of achieving long-term compounding returns. I want to expand on the last two segments of our strategy. How we generate alpha. The first is partnering with top-tier managers. In private equity, the dispersion between top and bottom quartile managers can be very wide. So we have a high bar on who we partner with. What we look for is a resilient investment strategy, a strong track record through cycles, and access to high-quality co-investment opportunities. Enterprise Trust portfolio has around 35 active manager relationships, split fairly evenly across North America and Europe. To provide an example, PAI is one of our longest-standing relationships within ICG Enterprise Trust's portfolio. The Enterprise Trust first committed to PAI in 2007 and has committed to funds 5, 6, 7, and 8, and has historically generated an average of approximately 2 times cost. Alongside their consistent historical performance, PAI has been a strong source of co-investment deal flow. We invested in 7 companies alongside PAI and generated a multiple of 2x and an IRR of over 25%. That's just one example of a manager we back. But equally important are the logos you don't know and the names that you simply cannot access as a public market investor, unless it is through the Enterprise Trust. This is one way in which our portfolio is unique. The second part of generating alpha is focusing on resilient companies. The companies in ICG Enterprise Trust portfolio have been selected in order to benefit from many different long-term growth trends. This is exemplified by some of the logos you see on the screen. Brooks Automation, for example, is a provider of semiconductor manufacturing solutions and benefits from the rapid digital advancements in technology and productivity. Curium is a leading provider of nuclear imaging solutions and benefits from the trend of increasing healthcare expenditure and an aging population. European Camping Group is the European leader owning and operating camping sites across Europe, benefiting from consumer spending patterns to more experience-led and convenience-driven purchases. And lastly, Stout is a specialist professional services firm providing valuation services to address regulatory compliance and benefits from the growth of increasing regulation and financial infrastructure across the economies. So these are the kinds of tailwinds that can support growth through different economic environments, and we believe are fundamental in our goal to deliver attractive compounding returns.